This is our Forex blog for August 30th, 2013, and these are our currency indexes. They show you visually what each individual currency is doing. And you can see the euro is going down. It went back up to a resistance area and had a hard time going higher, broke down again and trended down. You can see when a currency is above its hourly moving average, it tends to trend up, and when it goes underneath its hourly moving average, it tends to trend down. Look at the pound. Down, down. It's going sideways above its hourly, goes up, up, up. That's what typically happens. Most people seem to be telling me that they want to see our trading systems. Here's a picture I took earlier and posted on our Facebook page, which shows euro dollar today, and you can see it did a pretty good job. There was a loser here, small win, decent win, nice big win, nice win, nailed the low. Obviously this trade here would have been a small win, a loser, break even, and so that's for brand new traders that really don't know how to trade. But using our currency indexes, there's so much you can do. You can draw trend lines on here, and for instance, when a trend line, oops, hold on, that's FIPS. When a currency breaks the trend line, typically that's a great place to start looking for the currency to trend in the other direction. You can see the euro went down, rallied up, came down again. At 12 is a pretty decent place to be looking for buys in the euro, and you'd want to buy a currency that is likely to go down. You can see the pound was trending down, and a little bit before 12 broke out to the upside. Its trend is up. At 12, this one's near the upper containment bands, and so is the dollar. So the euro dollar is a pretty decent one to be buying at 12. The dollar's likely to go down. This one's likely to go up. The euro dollar on the chart here, you can see it pretty much after 12 the euro dollar is trending up. Basically this is kind of a 1 2 3 low, and you wouldn't have really gotten that signal at this time, so you really can't take this trade here. But this little flag pattern breakout right here went up about 8 pips. This one here went up. That's a pretty decent place to get in. In a nutshell, you want to use the currency indexes to buy the strong ones versus the weak. And there's a lot of ways to do that. One, look for a move up, like the yen here, and give it a chance to have a decent pullback, at least a two-wave pullback, 1, 2, from here onward. And also you can see the trend line breakout here at 830. The yen, which was trending up, had a decent pullback, found support at the point of control, which frequently is going to happen. It tends to be a magnet for price. When price is above there, you want to buy, below it, you want to sell. And it's a wonderful area of support resistance, especially if it holds that area for 20-30 minutes and starts to go up. It's very likely to continue. So at 8 o'clock there, you have the yen that's very likely to go up. Let me link these together so that they all will look the same. This one's very likely to go up. And which currencies are super weak? Well, the dollar just recently broke out from below to above its hourly, so it's likely to go up. The euro went up and has been going sideways. If it breaks its hourly right here, it's very likely to go down. So at 8 o'clock, the euro yen is an excellent one to be selling once the euro breaks down right here. And in fact, even before that, you can see when the yen broke the trend line right here, this is a perfect place to really look for sells in the euro yen. Let's link this one together too, and I'll make it smaller, and so you can see how it works. Scroll back to that point. Alright, so the euro had been going out for a couple hours. It only went up about 40 pips. This, as it's going sideways right here, you can see the yen's just about to break above the previous day's low. If you got short right underneath 130, where the whole numbers tend to act as support, you can see the yen's going up and the euro is kind of inching its way down. And when you're in a trade like this and you see the euro going down and the yen going up, you get a very high probability trade. Typically after 20-25 pips, if I see any kind of stall in the price, and especially when both currency indexes kind of stall, I will tend to get out of half my trade. So I would have been about 20, 25 pips, 22 pips. And you can watch them. The yen's starting to go back up. The euro is at for this swing is at the lowest low right here. So this is very likely to break through the 129.70 low. Yeah, not always. And you can see support on the chart for the yen, previous day's low. If it stays above that, it's bullish. Unfortunately, there's no support or resistance at the euro here. Unless the euro goes above its high right here around 106.45. So you can obviously get out of part of your trade here and look for re-entry. And you can see in this little bit of a pullback right here in the chart, the yen is starting to explode up. And as you watch this real time, this one hit the 15-minute moving average. You might have went short again. You're watching both of them. You want the yen to go up, which you can see it is. And ideally, you want the euro to be falling. If the yen goes up and the euro goes sideways, you can still make 10 to 20 pips on those trades. If the yen kind of goes up nicely like this, while the euro falls, you're going to make 20 to 50 pips. It's that simple. So let me just keep going forward and we'll kind of watch this. So you can see the euro went up there, but so did the yen. The yen went up more on that bar than the euro did. If you're watching this chart, you might want to put your stop right above the high, because both of them are going in the same direction. Yen's still going up, the euro's reversing, and you can see the yen is exploding up. And this allows you to keep absolutely ridiculously tight stops. Now obviously when I say put it above the swing here, typically I'll put it a pip or two above there so that 1 pip doesn't get you stopped out of the trade. But you can get into these trades at, let's say, 129.85 with your stop up here. You're risking 10 pips and you're very quickly up 10, 15 pips. And then when the trades work and you see one currency going down, the other one going up, you stick with the trade. And in fact, you also know that the odds of it going to or past the 1.618 Fib target, most of the time markets reverse at the 1.382 Fibonacci target, especially if the swing is 40 or 50 pips or more. So it's a 47 pip move. It's a pretty big move. Normally the 1.382 Fib target is going to be where it stalls, and in the past I would always tend to get out of half my trade there. Yeah, when the currency gets down to its lower containment bands like this and the upper containment bands like this, it's very likely to reverse the other way. So if you're in a trade like this, it's not likely to have more than another 10 or 20 pips of profit. If you're in this trade still with the entire position, you might want to exit half. And just like I said, when a currency is at its outer bands and another one is at its outer bands, there's a beautiful 20-25 pip reversal in 15-20 minutes there. So these are some of the things you can do to maximize profits, look for low risk, high probability counter trend trades, and also, most importantly, know which currencies to trade. And I'm only showing 4 from here. We got the dollar, the Swiss, the CAD, the Australian, and New Zealand as well.